We've had quite a bit of volatility in gold over the last month or so. No real overall direction, but there are some major news events coming out this week that I think are going to be key for the price of gold. So where's the next move going to be? We're going to finally see it break out or run back and test these old lows from the end of March. The last time we looked at gold, I did put an order in to buy. I was trying to buy 7 down at 16.75. You can see it here on the chart, it's still there. The price did trade down to about 16.77, so I missed it by a couple of dollars. The price has run up since then. Interestingly though, it's run out of steam pretty much where it was in mid-March, this sort of 17.60 area. And you can see it here maybe more clearly on the daily charts. It ties up with the high here from early March, just below 1760. So we've seen some swings in gold, but it still doesn't change this correction that the price has been in since these highs from early August last year, when we broke out, of course, to fresh all-time highs. A distinct lack of momentum since then. But is the news we're going to see this week going to change things and finally inject a bit of life into the price of gold? As usual, I'll talk about what to watch out for this week, major news announcement on Tuesday, then we'll come back and look at things in more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on the price of gold. We've seen quite a bit of volatility over the last couple of weeks or so, and it's a big week ahead, I think, potentially for the fortunes of gold. So more of that as we get into it. So as usual, what I'll do, I'll talk about what's been driving it, what to look out for, then we'll jump back onto the platform, look at things in more detail, and see if there is another opportunity in the price of gold. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And of course, we now do these live streams on a Friday, 2:30 UK time. They're proven to be really popular. We look at the usual markets that we look at during the week, but also some different markets as well. If you're subscribed with the alarm bell notification clicked, you get a notification off YouTube just as we're about to go live. Let's get into it. Let's take a look at the price of gold and the key events to watch out for this week. So just to recap what we've seen in gold over the last 12 months or so, all-time highs in August 2020, smashing through the previous all-time high, trading up to $2,075 an ounce. But since then, a distinct lack of momentum. You know, we've seen the price of gold, and I think it still is technically in a correction. At its worst, it had slid by about 18-20% from those all-time highs. We've seen a bit of strength over the last week or so, last couple of weeks, but I don't think it changes much from a longer-term technical view at the moment. So what's been putting the pressure on gold this year? Well, one of the things is a US dollar recovery. For much of last year, from April last year, the US dollar was in decline. One of the things that can help gold is a weaker US dollar. We've seen the US dollar make a comeback this year, and that's been one of the things I think that has put pressure on the price of gold. So why has the dollar been recovering? It's been about, one of the major things has been concerns about inflation a bit further out, perhaps towards the end of the year. There's a feeling that some central banks, the US Fed, are a little bit too relaxed about the threat of inflation. So we have seen the US dollar gaining some ground there. At the end of last week, we did have some confirmation that maybe inflation is going to be a worry. We saw factory gate inflation in China, the PPI reading over there coming in at 4%. This was higher than expected. Usually, if we're seeing higher prices at the factory gates, then we're going to expect that to filter through to the wider economy, to consumers, and push up consumer price inflation. But inflation can still help gold. You know, if we did see inflation, classically, gold is a way that investors have hedged against inflation. So to keep pace with the cost of living, we'd often see the price of gold rise. So at the moment, even though it's benefiting the US dollar, a period of higher inflation further out could still help gold. Which brings us back to this week. We've got US inflation data out on Tuesday of this week. I think this is going to be closely watched. We could see quite a bit of volatility over this number. And I think it'll be interesting to see, does it come in higher than expected? How does the market react? So keep an eye out on Tuesday for that. Before we jump back onto the charts, let's take a look at the big levels to watch. So we are trapped in something of a range at the moment. We've got the highs from the 1st of March at 1,760. These also stopped the latest bounce in gold. So 1,760 is turning out to be something of a problem. On the downside, again, it's been tested a couple of times, around about 1,675. So it's trapped within this, $90 range or so, the gold price at the moment. But let's put some color on these numbers. Let's see where the opportunity is. Jump on the chart and see if there's a trade. So as usual, as it's a gold chart, we need to start with the longer term picture. So here we go, going back to those August lows, that long term trend that did a good job all the way until March of last year. Then we saw the price accelerate away from there, and we're coming back to that trend line. That trend line is sitting around 1550 at the moment, so a couple of $100 below where we are now. If we saw further weakness from here, for me, we're still in that trend, and I think it's only if we slip below that does the medium to longer term start to look a bit more negative for the price of gold. That won't be much reassurance if you've been hanging on to it since 2070 an ounce, these sort of levels, and we have seen the price continue to retreat. We're still in this correction. I must admit, I think medium term, there's not too much to get excited about in terms of massive gains for gold from here. I think it is going to be interesting to see what the inflation numbers look like this week and how the market reacts. But you can see we do have a fairly steady succession of lower highs, lower lows for the price of gold, particularly so far this year, since about mid-January. And I think we really need to see some of these old levels from late Feb and early Feb broken to try and make things a bit more interesting. But let's take a look at some of the indicators. So if we kick things off with the RSI, it did do a pretty good job on that sell-off back down to 1677, where my order just missed being filled. The RSI did go oversold briefly and then turned around, of course, as the price moved higher. At the moment, the RSI is pretty much in the middle of the range, so I don't think we're getting too much from that. The MACD, if we bring that in, it's still long. The last sort of good buy signal we had was mid-March from the MACD. You can see it moved quite extreme, crossed over, given us a buy signal. Another, I suppose, little buy signal here in early April, again on that retest. So that's still positive for now. So maybe in the short term, perhaps there is a bit more upside to come for the price of gold. I think if it can break 1760, we could see a bit more of a recovery from here. I'd be targeting this sort of 1800 to 1860 sort of area from early to late Feb, I think, as the next zone. If we take a look on the hourly charts, we might see it a bit clearer. So we can see down at these levels, what a problem. 1760 has been back since early March. So as I say, if we break that, I'd be looking for a run back up to these old highs in this sort of area up here. So I think there could well be a breakout trade coming for shorter term traders. I think if you're a longer term trader or investor in gold, there's perhaps not the urgency at the moment, while we're still in this correction, to do very much. I suppose if you were going to be ultra conservative, you'd wait for this correction to break. That line is sitting at about 1880 at the moment. So we'd wait for strength through 1900, $150 above where we are now to start shaking that off. I think perhaps if we slip back down to these lows, it starts to look a bit more interesting again for a short-term trade. So what I would expect from here is more choppiness. I think there will be shorter-term trading opportunities, but still no real overall direction. I think we need to get a bit more information on this inflation outlook. Do we see inflation start to ramp up? Do we see some of the dollar strength start to fade? Then things get a bit more interesting. So for now, I'm happy to stick with that existing order. So I've got the order in from the end of March, buying 7 at 1675. It's quite a way below where the market is now, $70 below where the market is now. But if we do get a retest and a quick blip through those old lows, it could be an interesting opportunity for a short-term trade. So happy to sit on my hands, look for opportunities at the extreme, and we'll come back and update this when we have a bit more of that inflation data and we can see if sentiment is shifting. That's it for the update in gold. Watch those inflation numbers on Tuesday from the US. Let's see how the market reacts. But for now, from me, David Jones and Capital.com. We'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.